Do application programming interfaces represent the most important technology in business? Welcome to CurrencyCast. My name is Agustin Mackinlay. I'm the Senior Financial Writer at Cantox and your host. In this episode, we have the pleasure to welcome Sean O'Connor, Director of Treasury at MongoDB, the US-based software developer. So, Sean, a very warm welcome to you, and thank you for joining us in this episode of CurrencyCast.
Thank you, Agustin. It's a pleasure to be here and to talk with you.
Now, Sean, could you start by introducing yourself?
Yeah, thanks. I'm a treasury professional with over 15 years experience within both the corporate treasury and banking world. I've always been based here in Dublin, and I've most recently started a new role, as you mentioned, as Director of Treasury at MongoDB, and I will be based here in Dublin.
All right, and what is the typical day of the Director of Treasury Operations at MongoDB?
Oh, that's a good question, Agustin. I suppose, given I'm just 6 weeks into the job, I haven't had a typical day just yet. I suppose I spend most of my time meeting with individuals and stakeholders throughout the business to look at finding out what the treasury operations look like now, so I can look to consolidate and start building out a plan, I suppose, for how we take them on to the next level. So it's been quite varied. I've met with a lot of really good stakeholders across the business and colleagues that I'm sure I'll get to know a lot more over the coming weeks, months, and years.
All right, so pretty new to the job still, but I guess it's fair to say that most of MongoDB's products and services are priced in US dollars. Is that correct?
Yes. US dollars would be our prevailing currency. So much so that our Irish entity is a US dollar functional entity as well as our US parent.
All right. Well, at Cantox, we developed a notion that we call FX sensitivity. So, for example, a business that has low profit margins and a lot of weight of foreign exchange in terms of its business transactions, well, has almost by definition a high sensitivity to currency markets or currency market fluctuations. Well, I guess this is not really the case at MongoDB. Is that correct? I've read that you have maybe some exposure on the contracting side in terms of the euro and the pound, but I also read that your gross margins are north of 70%. So congratulations on that, by the way. But that makes it relatively less sensitive to currency fluctuations. Is that a fair assessment?
I think that is a fair assessment from what I've seen so far, Agustin. Yeah, we only offer, I suppose, billing in four currencies. You touched on trade and Swiss franc is the other. So at this moment, I suppose our exposure is quite light. It doesn't mean that it should be ignored, as all good treasurers would probably agree. Just because something isn't a major issue right now, it doesn't mean that may not change as the business develops and continues on its own life cycle, and as new markets are exposed, that we shouldn't look to put controls and measures in place to be proactive as opposed to being reactive. So yeah, I think your assessment is fair at this stage. And look, we have healthy profit margins at the moment, but we're still very much in growth mode. So that those margins are available for investment essentially. So yeah, we want to maintain that, but also want to mitigate any upcoming or future FX risk. So it's an area I have been looking at, and I'll continue to develop a plan of attack as we move forward.
That's right. I think you make a very good point there. Is not because so maybe a company has relatively low exposure in terms of the size, but it could be in a pretty risky currency and create a lot of damage. All right, so let's move a little bit to the technology side there of business operations, and we'll come back, of course, to foreign exchange risk management. But I know you've been involved in the implementation of treasury management systems. I know you're very knowledgeable about technology in treasury operations. And I've read a little bit about MongoDB and their API-driven approach to business applications. Now, in some of the cases that we see on the website of your company, it says that APIs, so those software to software interfaces that allow two or more computers to communicate to each other, they play a pretty important role in terms of removing some of the most manual and resource-intensive tasks in providing real-time data analytics, in allowing for businesses to scale their operations. Tell us a little bit more about that.
Yeah, well, look, I think within the business itself, APIs are very important to our core products, and given our customers and clients who are essentially developers, giving them access to real-time data to the MongoDB platforms such as Atlas. It's our fastest growing product for a reason, Atlas, and it will continue to be so. I think when we broaden it and look into the operations of the business and how APIs and other such technologies are being leveraged in today's world, I think that's where the conversation gets really interesting. I think there's maybe a misconception at times around tech companies and their operations. We obviously have access to amazing software developers and engineers and product managers who are really focused on our own internal products and on what we're pushing out to the market. But when it comes to the operational side of the business, such as treasury and finance and marketing, legal, we can get into what I like to call in tech companies the support functions. And I would probably describe more like a sprinter whose body and legs are maybe not connected, and its legs are its product. And he's like Usain Bolt. Well, the body's the operations and support, and maybe that's more like Mo Farah running a marathon, So the body's always lagging behind the legs, and it takes big leaps like technology transformations to actually catch up. But the legs don't stop, so you got to keep going. And I think how businesses decide to invest in technology, I think is very important. If we sidestep and think about it within Treasury, to me, the fundamentals are your bank account structures. And when you look at your geographies and your individual operations and how you manage that side of the business, I think getting that foundational move in place is a core move that ultimately sets you up for success when you look at a treasury management system or any of the bolt-in products that we see, from cash forecasting tools to other analytics. So I think really getting your foundations right and set, and being able to scale from those, I think is still, to me, the fundamental move.
Right. Well, I was about to ask you about that, so I guess this has been answered, right? But to us, at least in currency management automation, APIs play such an important role in exposure collection. Well, even before that, in pricing with an FX rate, and in providing traceability. So, for example, for automating swap execution. One last question before we move to the perhaps more FX related topics of this conversation. I know, and in a way you've already touched upon this, but maybe we can expand a little bit the conversation there. You mentioned that given all what's happening nowadays in terms of automation, that the role of the treasurer is evolving towards a little bit more like a relationships manager, right? You have so much to deal with, so many different stakeholders, the banking partners, the C-suite, the commercial teams. Tell us a little bit more about that. How do you avoid siloed-based approaches and acting as a relationship manager in a way?
Yeah, I think the expression "great minds think alike" or "feel seldom differ" comes to mind there, Agustin. I look at it very similarly, that Treasury right now, like most things in people when they move into their professional careers, is all about relationship management and sales. We're all selling something. If we're selling our ideas or if we're selling products and services to external customers, we ultimately have to be good relationship managers, and we have to be good salespeople. I think Treasury has really evolved due to being able to leverage off technology from a very ops-driven department to now where treasurers see themselves probably more as strategic business advisors, that ultimately liaise with other senior stakeholders throughout the business, be it commercial, be it legal, be it other finance leaders, be it the product team. When products are now being monetized, they're asking Treasury, can we partner up on this? So I think having that more holistic approach is really important. I think building rapport and ultimately strong relationships with your colleagues and peers is a fundamental thing. And that's, like, for me, being fresh into a role, trying to make those connects as early as possible. I spent the week before last out in New York meeting with a number of colleagues, and it's great to have those face-to-face connects as early in your careers at new businesses, because I think Zoom and Teams and video conferencing, look, it's great, but like, it doesn't feel still. It's not the same as shaking somebody's hand and sharing a coffee, or if you want to share a beer or a glass of wine in the evening, even better. But establishing those core relationships early doors, I think is fundamental to setting yourself up for success.
Absolutely, I think we would agree on that. So we can say also that the role is evolving less from in being less of a transactional role, in more of a, well, as you said, an advisory, a strategic player within the company. Is that right?
Yeah, I think so. And it's all partnerships. I think, like, we can call ourselves strategic business advisors or strategic business partners. I think ultimately it's very hard to get anything done on your own. So if you stay in silo and you don't have the buy-in from other teams and other colleagues, getting your ideas across the line, you're gonna at times hit be in a cul-de-sac. You're gonna hit a brick wall, and you're gonna rely on someone from the left or the right of your team to help bail you out. And ultimately implementing a treasury management system, let's use, for example, Treasury can't just go and implement it on their own, because then it's a standalone system. So how does it fit into your ecosystem? You need the buy-in from your accounting and GL teams if you want to look at ERP integration. If you're looking at your payment platforms and other such systems, you've got to work with those teams too. So looking at it as an ecosystem that Treasury is one segment of, I think is really important. And I think it works both ways as well. I think you've got to ensure that you're there to be able to, support and advise your colleagues from other areas too.
Right. That's really interesting. Now, Sean, let's move a little bit towards slightly more technical questions, especially related to currency management, foreign exchange risk management, and your past experience at both Aer Lingus and Xerox. And so let's start by saying just that at Cantox, for example, we think that currency management is more than currency risk management, and in turn, currency risk management is more than the execution of FX derivative transactions. We give a lot of importance, for example, to pricing in foreign currencies, what we call multi-currency pricing. Do you think airlines can or should boost their multi-currency pricing, that is, take advantage of the benefits of selling in more currencies with FX risk under control? And would that not be, so for example, again, a case of using application programming interfaces so that the finance team feeds, in a way, or so to speak, all those commercial teams with the FX rate they need in real time, be it spot rate, forward rate, with a markup per client segment, per currency pair. In other words, discuss a little bit more multi-currency pricing, maybe especially in the context of travel and airlines.
Yeah, it's a good question, and I suppose there's probably a lot of people on the commercial teams in airlines probably think about this a lot. I think multi-currency in airlines and aviation is probably a trick being missed. From a revenue growth perspective, and bringing customers on board, what we tend to see is customers are being displayed currencies from departing airports, you know. So you could be someone in the Middle East booking a flight from Dublin to London, and they're going to be showing euros, but they may be using their local dirham card to pay. And you know, there's ultimately going to be conversion there on one side. You know, if it's the customer eating it, or if it's the business itself. I think, like, from having spent some time working a lot in e-com in my previous role and managing the relationships, the partnerships on the with our PSPs, you know, I think it's probably an area that's probably overlooked by airlines in how they manage their front end when it comes to pricing. You know, especially that ultimately airlines are e-com business now. You know, the vast majority of revenue is collected online. You know, not many people go into their travel agents anymore and pay for their flights in cash or by card. Even if they are paying, they're paying with card. Where that's where the world is now. Everything's. I think COVID kind of probably was, like, you know, one of the final nails in cash's coffin. Like, you know, and we're all using cards or other alternative payment methods. So I think airlines offering a variety there. You know, there's two ways about it. You mentioned using APIs, so you know, you can manage the FX at the front end through your PSPs, or alternatively, you can take that if you've got the volume and scale and the economies of scale, you can take that in-house and use partners like Cantox, or if you have the in-house, if you have a large enough team of specialists, you know, to look at rationalizing that risk, because I think it's all about concentration, you know, and seeing where potential offsets lay, you know, within the business, and then seeing what's left over. So to me, yeah, I think there's opportunities on both sides of the transaction, be it right at the front end to mitigate some of the FX. And don't get me wrong, you're not going to get the best exchange rates off the schemes like Visa and MasterCard, but depending on your volumes, you know, it may justify taking it in-house. So I think airlines probably need to think a bit more like e-com businesses, because that's what they are in how they structure their payment schemes. And I'm sure some of them have. But I think that's probably not as prevalent in aviation as it is in other industries.
Right. That's just a fascinating point, right? It's about exactly as you said about aggregating so small pieces of exposure into larger positions, and perhaps there to set conditional FX orders to set the pricing, right, and to manage the corresponding risk. So really, really very interesting point. Let's go into another subject, but still in the world of airlines, and in particular, so Europe-based airlines. I see, correct me if I'm wrong, but I see that sometimes the role of, or the sub-role of, say, FX risk manager goes hand in hand with the role of say, commodity price manager here, the fuel price risk, right? And I guess it's quite obviously because energy costs are priced in US dollars. Is that right?
Yeah, that's fully correct. And ultimately, from a hedge accounting perspective, you know, you need to do your hedge effectiveness testing and have your underlying exposures to allocate against. And ultimately, fuel being probably outside of staff costs, the next largest cost within airlines. I suppose that depends on what part of the price curve we're on oil prices, you know, where it may go from the second largest expense up to the largest expense within aviation. You know, so using your dollar hedging is predominantly being allocated against your fuel exposures. So there is that correlation. In addition to that, I suppose when we look at other large costs within aviation, a lot of it is underpinned by the aviation financing and leasing side of the house, which again is a dollar business. Even with the emergence of lessors in Asia regions and in the Middle East, we still see that dollar is the prevailing currency. So again, it's a large underlying cost. And unless you're on a transatlantic route where you're maybe collecting a material amount of US dollars, so you have something organic to offset, you're going to have to go to market, you know, and use your functional currency flows to hedge these dollar exposures.
Right. Now, would you going back to the FX part in particular, would you favor, so for example, a layered hedging approach in a way that you could maybe smooth out the FX rate, the hedge rate over time, to avoid those the bad surprises from the cliffs, right? That we're seeing. We used to see in currency markets, not really now, but we still see some of those in commodity markets.
Yeah, look, 100%. I think layered hedging is by far the dominant strategy applied by airlines that do hedge. I think there's two sides of it to look at. There's ultimately when you are buying your fuel, and you have your seasonality, but then the other side of it is you have a different kind of seasonality around how flights are booked. Most people book it in the first half of the year. A lot of flights are booked with a lead time. So you're sitting on cash that's come in the door then, and the flight may not be till later in the year. But, for you to be able to put a price on that flight 6 months out, you got to have some risk protected on what the cost of filling that plane is going to be on that day. So, yeah, so there's that natural kind of, ensuring that you smooth out the curve. Like, at the end of the day, we're risk managers. We're not trying to beat the market. We're not speculating here. It's about removing volatility and increasing predictability, and to allow for prices to be put at competitive levels that allow a margin to be made by the business. But then it's a super competitive area, so you can't go price gouging either. So they're trying to balance out the two, and ultimately it is being underpinned by how much is it costing to get that airplane up in the air.
Yes, absolutely. Well, okay. Look, let's move a little bit to another so FX related management subject. But maybe I think it has a little bit more to do with your past experience also at Xerox, where, if I remember well, in a previous conversation, you told us that you were involved in an in-house bank project, and one of your tasks was to remove as much exposure as possible. That's particularly interesting to us. Would you favor here perhaps a drastic and simple approach consisting in netting out, so just commercial exposures in the same currency pair, same value date, and same amount? Or would you go for a more complex portfolio type of approach with correlations, calculations, and all of that?
Yeah, I suppose when you look at a business the size of Xerox and the vast volume of entities that they have within their group structure, you're talking about a business that literally has thousands of subsidiaries. Well, at least wasn't far off. And, there's a lot of intercompany going on. So a lot of FX risk can actually be, can impact the financial statements, and it's all being driven by intercompany. So running that netting program, running a global netting program was the choice at Xerox, because it made sense, given the volume. If we went to manage entities on an individual level and manage their FX risk, be it through a complex kind of hedging program, it probably we probably would have needed another team of people just to run those programs. So ultimately running a netting cycle for intercompany, and then allowing the in-house bank then to manage the net risk, in a back-to-back world with the kind of material, with the entities that had materiality in their exposure. What was the decision there? And I think when you look at companies at the size of Xerox, I suspect that those type of programs are quite relevant, because they can be managed in-house. They could be managed through automation, because ultimately you're pushing intercompany invoices into a netting system, allowing the cycle to run, and then it basically gives you your exposures at the end, and you can go in action. And I suppose over time and how your data analytics works, this isn't what happened at Xerox, but this is, I suppose I'm just elaborating. I don't know what happened. It's been so long. I'm sure it's been evolved, but ultimately trends may emerge. And I think when you're looking at trends on a net basis, on like a net exposure basis, then opportunities for running maybe some hedging opens up, but until you're, I suppose, have some degree of comfort and certainty around those exposures, you probably don't want to go off putting in large positions, at the risk of increasing the risk as opposed to mitigating it, which is our aim as treasurers.
Right. Okay. Now, continuing with that topic of broadly speaking, when one discusses netting at the group level, it's almost unavoidable. In fact, it goes hand in hand with the issue of centralization, right, of foreign exchange, risk management centralization, and centralization of maybe other functions. And I guess, Sean, that I almost think that I know your response, but let me phrase it this way. We could think of a setup where the subsidiaries have, say, full control over their FX policy, and they would also be able to execute derivative transactions with their own liquidity providers. That would be complete decentralization. And on the other part of the spectrum, we would have, say, headquarters setting up or setting the FX policy for all subsidiaries and being the only entity authorized to execute external FX transactions in derivatives markets. That would be full centralization, where you would have subsidiaries executing mostly what we call internal trades. My question is there life in between? Are there other setups that we could imagine? So, for example, letting subsidiaries set their own policy, and in a way giving them incentives to improve their forecasts, but perhaps letting them only execute internal trades and leaving that execution to headquarters. I mean, there could be more than one of those setups, right? And I guess it's going to depend on many factors. What would you think?
Yeah, look, I think it's a good point, and we've probably seen both extremes that you mentioned there, and probably even many other examples, depending on how businesses have grown. If business have grown organically, or they've grown through M&A and have absorbed other businesses that have had different ways of doing things. We all know when it comes to, say, post-merger integration, there's always time. It always takes time to get everybody on board. Personally, myself, look, I think the most important thing is consistency. Okay, so that everyone is kind of towing the same line. And my concern, suppose, with one of those methods, as in allowing local subs to be transacting, or they've got to stay to a policy, is that they have the people, boots on the ground, that are treasury professionals. Right. So you can't be guaranteed, depending on the size of your business, the number of subsidiaries you have. You're not always going to be guaranteed that you've got those resources locally. You may have a local business partner, finance business partner, who's wearing many hats from all areas of finance, but won't necessarily be a specialist in treasury. So knowing when to transact and when to trade would be my concern there. Also, I suppose my other concern there would be that, depending on each subsidiary isn't created equal, if you get me, as in some will be more established than others. So when is critical mass? When do you determine they can drive by themselves, essentially? Would be my concern. So again, having consistency, I think, is most important. So I think having a more centralized function is probably gives you more chance at getting that consistency. But I suppose the downside of that is the local staff tend to have more insight on the flows. So when it comes to forecasting, like you mentioned, ultimately, the centralized function is relying on those subs to be pushing up their local forecasts. So I think, look, ultimately we have to end up in a world of balance, and where we partner, and maybe there's cases that local staff can be empowered to transact, but I ultimately think policy should be driven from the top, because then that's the only way you can ensure consistency across the organization. And look, I know that doesn't always work. We've all been on both sides of that fence, where we're the ones maybe dictating to the subs, or where we're the subs being dictated to, and it's a push-pull kind of relationship, but I think it's as close as you can get to consistency, and I think that's the most important thing. I think is that policy is adopted on a global basis, unless for some strange reason, be it because of it being an exotic currency pairing, that you've got to come up with alternative solutions. I think you should look to be consistent.
Right. Well, I like that idea of consistency and an Irish sense of balance. So let's move maybe to our final point in this discussion. At Cantos, we're generally reluctant to discuss currency markets. We think ultimately foreign exchange or exchange rates are unpredictable, right? But let's discuss a little bit the situation in the UK and the British pound. I know that MongoDB has some exposure. I've read it in the statement, in the financial statements on the contracting side to the pound, and I guess that your experience in Dublin has converted you into an expert in the GBP euro exchange rate, right? Now, the pound has been, it's no secret, very volatile. It's been so it has a crash last year. Then it went on to be one of the most the best performing currencies. It's a little bit weaker again, and also the pound is somewhat a particular currency. It trades at a forward discount to the euro and a slight forward premium to the dollar in that context. So there is evidence that UK-based treasurers are really concerned about foreign exchange risk. But there's also a sense that, particularly among the small and medium-sized enterprises, in the UK, right? In the UK, there is a tendency to go for ad hoc hedging, right? Which is another word for trying to forecast currency moves and try to take a position. Would you not agree that this is a particularly dangerous scenario to go about unsystematic hedging?
Yeah, look, this is you've made some really interesting points there, Agustin. I think I think GBP and like cable and GBP euro. Look, we could have a whole separate podcast about that, and ultimately what's causing this strange volatility, and I think most people know a lot of it's probably underpinned by geopolitical issues, from Brexit to changing of the guards in the US over recent years, and a lot of, I suppose, systematic issues on both sides. But I think leaving that alone and looking at more at UK corporate treasurers and this growing trend of, as you said, almost transactional driven hedging, ad hoc hedging, if you want to call it. And I think, look, transactional, if it is transactional driven and it's to do with capital expenditure of some sort, it makes sense. But ultimately, that should be governed by a policy. I think when you get into ad hoc hedging, you're ultimately, it comes back to that consistency point I made previously. I think, you have a hedging policy or you don't have a hedging policy, and I think, if you're sitting on a board of directors and you're looking at, hedging at one board meeting and no hedging at the other board meeting, you'd be asking yourself questions around, well, look, where's the consistency here? Are we approving a policy that we're going to stick to, or are we just going to kind of fly by the seat of our pants, kind of, and be reactive to what's happening? So I think it's fraught with risk. I think it's also has a lot of upside if you're doing it ad hocly, but again, it goes back to points we touched on earlier. It's about removing volatility and increasing predictability. So I think unless you've got credit issues where you can't get access to facilities, that you can't have an ongoing hedging program, and you've got to do it more ad hocly.
Right.
Unless that's the case, I think you should be more systematic in your approach to hedging, because it's something that you're not going to see the main impact from on the short run. You've got to see a couple of years of financial statements to actually determine has this been successful or not, because we all know we have incidents happen in the markets, and we have crazy years, we have COVIDs, we pandemics, we have these things that happen, and we have years where the FX markets and the interest rate markets can be so volatile, and then we have other years where things are very quiet and the curve is quite flat. You've got to judge it on across all of those periods, as opposed to looking at it in isolation of, let's look at what happened in Q2 2022, or we did some hedging, then look, it was great, or it was terrible, because of what happened in the market, and it was out of our control. So I think systematic hedging, if you're adopting hedging, be systematic or transactional, but don't try to be somewhere that's not sitting there, because you're ultimately probably creating as much risk as you're mitigating.
Absolutely. Absolutely. I agree with that completely. Now, look, Sean O'Connor, Director of Treasury at MongoDB. We've been through lots of topics. We discussed application programming interfaces, the role of treasurers as relationship managers of sorts. We then discussed a little bit pricing with an FX rate for airlines and hedging at non-US based airlines. And we moved on to netting and FX centralization. So lots of topics, and I want to really thank you for that, Sean. And I hope we'll see you another time in CurrencyCast.
Thank you, Agustin. It's been a pleasure.
Thank you.
Thank you.